and welcome to our final Euromoney live stream of the year, Saudi Housing Finance, Euromoney Review and Forecast for 2021. My name is Chris Wright. I'm the Asia editor and a Middle East contributor for Euromoney magazine, and it's very good to have you with us today. Now, before I start, I must read a brief disclaimer. This live stream is for information purposes only. We are not providing investment or transaction advice. All opinions are those of the presenter, guests and audience, not of Euromoney Institutional Investor PLC, and all content is copyright Euromoney 2020. I'm joined today by Richard Banks, who has been the series leader on Euromoney's digital series, Saudi Housing Finance 2020, the continuing growth of a key global market. And it is a key global market, potentially. This is an important and extremely large market. The potential value of new Saudi mortgage loans over the next 5 years is around $280 billion. That raises important questions about demographics, house building, liquidity, the development of the secondary market, a host of things really, all against the backdrop of the developmental goals of Vision 2030. The Euromoney Saudi Housing Finance Market Report, which you will be receiving soon, addresses these important issues in considerable detail. But I'm delighted to have Richard with me today to discuss the findings that this series has made. Welcome, Richard.
Chris, good morning or good evening to you. It's extremely strange to be sitting as the interviewee rather than the interviewer, but well, I'll give it my best shot.
Yes, this is going to be a new experience, but it's a successful one, I'm sure.
I'm
no one knows more about the subject than you. I'm going to ask you first, just to, sorry?
I said I'm ridiculously nervous.
Oh, don't be nervous. You've got this. You've absolutely got this. I'm going to ask you to set the scene for us first. Saudi's demographics, trends around urbanization, and all of that, of course, within the context of the ambitions of Vision 2030. So set the scene for us.
Yeah, if I can go off piste immediately and just talk a little bit about what we were doing. So we've at Euromoney, we've worked with the Real Estate Development Fund as our primary partner in Saudi Arabia now for about 3 or 4 years. We've been very involved with the development both of the strategy and the implementation of the parts of the HVRP, the Housing Vision Realization Program, which is one of the 13 programs under the sort of Vision 2030 umbrella, right from its sort of inception. I mean, we're not advising them on what it is, but we've been helping them communicate to our global audience of financial professionals. And we, in that project was really centered around an annual conference where we brought some 600 people to Riyadh. But, you know, for obvious reasons, 2021 didn't happen. And so working very closely with REDF and also with the Ministry of Housing, who are terrific, and the Minister, Majid Al Ghal, is a legend, private sector guy, very switched on and extremely, I mean, a demanding, but a very nice person to work with. I mean, he really gets it, and that's pivotal, as you know, in places like Saudi Arabia. If the guy at the top doesn't get it, you haven't got a hope. But Majid gets it. And so, you know, we sort of retooled and said, how do we continue to tell the story? Because it is a good story, as you said, but not, you know, not in a hotel in Riyadh. And so we came up jointly with REDF and the Housing Ministry with the idea of, you know, doing it digitally. And we've done, I think, I can't remember how many now, but sort of 7 or 8 live streams, recorded interviews, panels. You know, you yourself were part of it when you interviewed Chung from Chagamas. We brought in 3 very high-level international speakers: Ginny May, Chagamas, and on Monday, Luca Bertolot from the ECBC. I probably got that wrong, but I think it's the ECBC. I know it's something else as well. European covered bonds, the Malaysian example, the US example. So, you know, in addition to our Saudi guests, we had that. And the sort of capstone of all of this effort has been the creation of our own forecasts for how the market will work. And that's what this report is. And I'm the person for my sins that wrote it, ergo me sitting in this chair. Otherwise, I'd be sitting in your chair, as it were. So that's the sort of conceptual background. I'm sorry, I just thought it was sort of,
No, not at all. Absolutely worth going off piste.
Because
now I'm going to drag you back onto the piste for the,
yeah,
the demographic picture.
Because we've never done this before. I mean, this idea of creating analysis, it's not reportage. I'm not a journalist, you know that. I mean, I'm barely a presenter. I mean, I'm really an advertising salesman, but what the hell? So this is a new thing for us, and it's been a great experience. We've learned a huge amount. So let me talk about the report. I think the context is, and I'm going to show you some slides. I've always told my presenters not to do this, so I can break the rules.
You may.
If I can. So I'm going to pick out a few pieces from the report and share them. So, on this screen, the chart to the left is your key chart. The first key chart. If you go back to 1950, the population of Saudi Arabia was about 3 million people, and those people were spread out over a geographic landmass the size of Western Europe. I mean, we forget that because we're going from point to point always in Saudi Arabia. You get on a plane, you go to Riyadh, then you go to Jeddah, then you go to Dammam. If you're lucky, you get to go to another city. Most people don't. You never see how big this place is.
Yes.
So 3 million people in an area the size of Western Europe. I mean, it's nothing. And over the past, since 1970, the kingdom has been on a pretty clear trajectory to take its population today to around 34 million. Most of the consensus estimates that it'll hit sort of between 40 and 50, somewhere around the middle of this century. So, that rate is not going to slow for another 20 years. These people need to live in houses.
Yes.
It's very simple. And if you think about it, when did the population start growing? 1970. So, you're getting a really serious exponential level of growth in the 1990s, 2000s. Those people now between 25 and 30, they are the ones that need houses. So, you're really seeing that it's not just a question of, and we'll look at the age structure in a minute, but that's your key story. And the other part of it, of course, is that because it's so big and because most of it is desert, and it's jolly beautiful, and anyone that hasn't been to the desert, I mean, it's not just a thing, it's all sorts of different things. Saudi Arabia is an amazingly beautiful country. People laugh at this tourism Saudi Arabian stuff. I don't, because it's epic. And one of the things on my bucket list is to travel more outside of the cities. I mean, the cities aren't massively beautiful, it must be said, but the place as a tourist destination, incredible. Anyway, point being, there are a small number of cities, and that's where the people live. And you're dealing with a fast-growing, relatively young, very urban market. A lot of it is concentrated, of course, in Riyadh. And Riyadh is, you can look at this chart here where Riyadh is estimated now to be around 7 million. And forecast for 2030 is to be around 9.5. So now 2.5 million people moving to Riyadh, or growing in Riyadh. And anyone who's been to Riyadh will see that there's an enormous amount of development going on, particularly in the north of the city. And then when Qiddiya comes in the southwest, I think it's southwest, you'll see another whole zone growing. The smaller cities are all forecast nearly to double in size by 2030. And then, if the NEOM project does what they want it to do, that's going to go from 0 to 1 million by 2030. And, maybe it will, maybe it won't. I'm a little, that's the one I have the biggest question mark over, but given everything they've done in the past 3 years, putting big question marks over things, perhaps that question mark is slightly smaller than it was 3 years ago. So,
sure. But whether NEOM thrives or not, the central point is the same, isn't it? A huge demand for housing. These people need places to live. Urbanization is a very clear trend.
Yeah.
Okay, what are you showing me here? Population.
So this, I think, is an important chart because it tells really two stories. You know, the pyramid will actually look, if you took out migrant labor, and the reason it's got this funny bulge in the middle is because Saudi historically, as described by the chairman of Samba on our webcast last week, he said, you know, we exported capital and imported people. And again, you know, there's a huge pool of migrant laborers, up to maybe, I mean, I think it's probably just under a third of the population are non-Saudis. And that's right through, you know, from the senior expats running financial institutions or advising ministries to, you know, the cleaners and the construction workers and all of that. And yeah, there have been some issues with them, but, you know, with their treatment, and the Saudis, I think, are beginning to understand that they've got to sort of sort that out a bit and change the conditions. But, you know, that explains this bulge in the middle. Without, if you took out the migrant laborers, you would have a much smoother pyramid that would run like from that 50 there to that 15.
Yes.
And so what that says, of course, is that, you know, that is your population growth in the next 15 to 20 years, and by association, you know, that is the underpinning of demand, because people need, you know, young people, that's your affordable home demand structure. So yeah, underlying everything is this demographic story, which is, you know, growth in population, young population, all of that, and that's got another 20 years to run.
Absolutely. And of course, an overarching framework. This is not just a question of organic growth in a population, is it? But Vision 2030 sets clear goals, I think, for where the population is intended to go, where urbanization is intended to go, and indeed housing.
Yeah, I mean, you know, we, as I said at the beginning, we've been involved with the whole Vision 2030 project from before its inception because of our work in the Kingdom, and very closely involved in the HVRP, the Housing Vision Realization Program. So, you know, when this was all announced in 2015, 2016, you know, there was quite a lot of eye rolling going on, because the Kingdom had announced these sort of things before. In fact, when we went to the Kingdom in 2006 for our first major conference, you know, the Economic Cities Program was announced. It never really took off, and there were a whole bunch of other things. The mortgage law was looking like it was going to happen in 2007, but it didn't really take off. And so there was, I think, an understandable skepticism amongst international accommodators that, yeah, fine, great, we've seen this before. And, you know, we were wrong, flat up. I mean, they, you know, they really mean this. And it's been nothing short of a root and branch reform of the process of government, of the legislation, of the structure and organization of ministries. I mean, it is, anyone who knows the Kingdom will tell you that it is a very substantially different place in 2020 than it was in 2015 or 2016. And, you know, say what you like about, you know, various people involved with the leadership of Saudi Arabia, but there is, you know, this country is going places, and it means it. Now, you know, is it going to achieve everything that they've set out to do? Well, no, probably not. But, you know, so what? If it can get 70% of the way, then, you know, it will have done nothing. You know, it'll be a development story that people, you know, study for decades to come. And, you know, now I think the sort of, is this going to happen question is, no, it is going to happen.
Yes. Is
it going to have the effect that they want it to? Well, that's a debatable point, but is it going to happen? Absolutely. So, you know, but when they say this is going to happen, we believe that now. Yeah. You should take that as read. So, and housing was a key, you know, housing is one of the 13 pillars. So, you know, it's up there with, you know, financial market reform, with privatization of industries, with you know, culture, with health. You know, it is a top priority for the Kingdom, and, you know, it directly reports into you know, the highest level of the Kingdom, the Council on Economic Development Affairs. So,
absolutely. So that's our context. So we have the demographic patterns, we have the state direction and heft behind it. Next question is, if we have growth in housing of such scale, how about a housing finance market? What's the need? What's the opportunity? This, of course, is the heart of what we've been studying.
yeah, I mean, the challenge has been in, you know, it's the problem that Saudi Arabia faces, or has faced, and continues to face, is those words that, you know, we hear every day here. I was looking at it in the context of the place where I live only last night: affordable housing.
Yes.
And that is not housing, that's affordable. There was no problem. The traditional market in Saudi Arabia was, you had money, you built a house. You had more money, you built another house and you rented it to someone else. And that was it. I mean, there were exceptions to that, but that is essentially how it worked. It was it was a small market. It was a market that was, you know, landlords and tenants. There were, you know, HMOs, houses in multiple occupancy, so whole families would live in compounds and all of that. The sort of Western model of, you know, everyone having their own house one house per family was not really there. And, you know, there was limited stock, and that stock was expensive. So in the context of what we're talking about, the government decided that they needed to, you know, assist the creation of stock, which they do through the Ministry of Housing, and also the affordability angle by working through the Real Estate Development Fund to subsidize mortgages. So, you know, here is a affordable house, and here is a way that you can afford it. And that was the plan. I think, you know, that's what presents the opportunity, is because rather than doing it themselves, which they used to, you know, the RIDF used to issue mortgages. And if you can imagine the joy of going to a Saudi government department and applying for a mortgage pre, you know, 2017, pre 2015, and how long it would take you to get it, and what an inefficient use of government finance it was. You know, it was, I think the backlog, had they continued issuing mortgages through REDF at the same rate, just to clear the backlog of applications, it would have taken them 20 years.
Right.
So not any more new ones. So everyone just stopped asking for mortgages, but just to process them. You know, they were processing somewhere between 10 and 20,000 mortgages a year. And we'll come on to this in a minute, but now they're doing it a month. So more than that every month. So you will see, you sort of see the scale of the opportunity. People want, there's a huge demand, but people don't necessarily have the financial resources. They're not used to paying mortgages. They don't understand how it works. So the government steps in and it says, we will work through the banks. The banks will lend you the money. We, in some cases, will give you a guarantee. The banks a guarantee, but we will also pay all or part of the interest on your mortgage. Although they call it interest, the profit rate, it's a Sharia structure, and I apologize for not really understanding. So, you know, you've got this, you know, demand supply mismatch, and they've used the financing to bridge that gap.
Yes, yes. I mean, it's interesting. I see a question coming through already asking, is housing affordable to ordinary young Saudi Arabian people? One might paraphrase this also as saying, is it working? Is there progress being made there yet? Or is this really still an ambition to aspire to?
I mean, you know, I want to, you know, if I can share my screen again and show you a couple of pages from the report. Let me just pull that up. And interesting, you know, if anyone who's watching is actually interested in this report, and you're not, you may have to adjust your marketing preferences. So if you have opted not to receive certain types of emails from Euromoney, you won't automatically receive this report. So if you want it but haven't expressed that interest, email us or something, get hold of us, and we'll send you a copy. I think there'll also be a copy on our website that you can download. So this I think this chart, there are 4 charts I want to show you, because they are similar but importantly different. And this is the first one, and this is the simple one. New mortgages issued quarterly by banks and finance companies. So this is the number of mortgages that are being issued in the kingdom. And if you look back here, 2016, so this is Q1 was sort of pre the real launch of the HVRP, which happened in Q2 2016. That's the launch of the strategy, not the launch of what actually happened. So you've got about 8K mortgages per quarter, and this is the Vision 2030 HVRP Housing Vision Realization Program kicked off about here in April, and that set about to transform the REGF, to energize the banks, and that period took about 2 years to get it sort of together, get all the systems in place, get the people, get the regulatory bodies, SAMA, CMA, all the others, get the regulations in place to do what they wanted to do, risk management, all the infrastructure for that, valuations, all of this stuff which was there but was very, very small and needed to be upscaled and grown. And then you see when it started to work, really, they kicked it into gear in Q3 2018, and boom, off it goes. And now this is, so this is quarterly. So in Q1 this year, it was about 75,000 mortgage contracts were issued. And these numbers come from SAMA's own report. So this dip, well, that's COVID. That's the lockdown.
Yes.
So it dipped from 74 or something like that down to 60-ish in the space of that quarter, and then back up again to about 78,000. So it's a new record in Q3. I haven't seen the Q4 numbers yet. Well, they're not out yet because we're not finished with Q4. But the anticipation is that there will be a similar number in Q4.
Yes.
So just on that basis, you can see the difference. We are doing, or the market is doing. Sorry, I shouldn't say the market is doing 75,000 plus contracts a quarter, as compared to sub 10,000 a quarter, which was the sort of norm going back to the beginning of recorded history. So bang, there you go. Did it work? Yes. Simple answer. It did. And this is this chart here. These 2 other charts. Well, I've got, as I say, 3 more charts to show you. So this is the cumulative number, which is important to know about. Market penetration. How much more is there to go? We're now up to about 500,000 mortgage contracts issued, which is, again, a very impressive growth rate. But there's a lot more. If you think the population is 30 odd million, we'll be rising to 45 million, maybe higher. And you also see a rebalancing of the ratio between migrants who don't buy houses generally and can't.
Yes, yes, indeed.
And you see here on the right, this line here is particularly important, which is the value of it. And what we're seeing interestingly here is a lot of this is on for self-build, hence the land, the green line. There's still a problem with the amount of stock. So what we're not seeing in the market, which you would expect to see, is a massive uptick in the number of houses. That's because there isn't stock, and this shows that where this is going primarily is into the new build, like self-build or.
Oh, I see. So the reason for a disconnect between the number of new mortgages and the number of new houses is the fact that those houses don't actually exist yet.
Yeah,
you're going to take the money and then build them yourself. Okay.
Yeah, what we think. The data is still a little difficult to get.
Yes.
Is that this is going to fund land purchase and construction.
Right.
So we should see, that with a lagging indicator of maybe 12 months, a very significant uptick in the number of houses, and then whether those mortgages are then refinanced on the value of the property. I mean, there's all that, but that's what's going on here at the moment.
Yes, it's interesting. It's a question again I see coming through in the Q&A just as I look at what's coming through, asking whether there will be enough supply to match the demand going forward from 2021 onwards. Because it does seem like it's going to take a little while for this all to balance itself out, the growth in the mortgage compared to the growth of new stock. Is that fair to say?
There's, like all bits of analysis, Chris, we'll talk about this and I'll show you the final one, so I just stop. Sorry. I find it very hard not to take control of these things.
Be my guest, you're the expert.
I'm sorry. I want to start taking questions and telling you you've got to hurry up because we're behind time. But anyway, sorry. Look, I mean, like any piece of analysis, it creates as many questions as it answers, and there are some interesting questions, and I don't know the answers to them. Like, why have house prices not rocketed up in Saudi Arabia? Which I don't know. I mean, they haven't. There hasn't been this massive spike in house prices, which you would think there was. But I think that comes from the fact that the majority of houses in the market still are quite expensive, and it's the affordable ones that and they are people living in them, and you don't want to sell it because where are you going to go? So house price inflation is still relatively muted, and I'm not sure exactly of the reasons why that's the case. There's always the alarm, worry that, well, okay, those contracts are going on land. Are people actually building on that land, or is this a speculative bubble? I'm inclined to believe that it isn't, because the central bank, CMA, REDF, housing, they're not idiots. If we can see it, they can see it, and this is something that would sort of torpedo the whole initiative. So I don't think that's there, but I think stock is an issue, and we're not seeing a true market dynamic yet, because the price as an indicator is not moving in the way that you would think it should. Yes. And I don't think anyone knows why that is. It'd be very interesting to unpack if the data, if we could find the data to do that. But there is a shortage of affordable housing because people can't build it quickly enough. I know that the ministry is working very hard on that. They're looking at this whole business of modular and speedy construction, but maintaining quality. You've got to remember, it's to coin a phrase, it's bloody hot in Saudi Arabia in the summer. So you need to build in a certain way in order to have. You can't just build the same modular construction you'd use somewhere like, say, Europe, because it's got to withstand extremes. So it's a technical challenge. I know they're working on it. I know that they're promoting the developers. There are a few large developers, but historically they've always focused on higher end properties because that's what the margin was. It's an emerging market. There are a lot of issues, but I think the supply will come because the demand is there. These two things are related.
Logically, it appears to fit, doesn't it? Now, before we turn it over to more of the questions, I think we've just answered the one from Majid Raji there, but there are plenty more coming in. Let's speak briefly of the secondary side. As you mentioned, I've been part of some of the other presentations in the series, interviewing Chagamas in Malaysia, a market that has very successfully built a secondary market around house financing. What's the opportunity and the requirements in Saudi then?
Well, one of the key entities in this show, and one of the ones, of course, as Euromoney we are most interested in, is the SRC, the Saudi Real Estate Refinancing Corporation. I probably got its name wrong. Well, it's Saudi. It should have another initial in its acronym, and it doesn't. Yes. So the SRC, let's call it that because that's what they call it, is run by a top chap called Fabrice Soussini, who's ex-BNP Paribas, highly experienced mortgage investment, asset-backed MBS, securitization, investment banker. I mean, a guy who knows his onions very, very well. And it's owned by and capitalized by PIF, the Public Investment Fund, the Saudi Sovereign Wealth Fund. And its job is to be a Fannie Mae, Freddie Mac or Tagamas, similar, for Saudi Arabia, essentially to take pools of mortgages from the balance sheets of Saudi banks, package them and sell them to institutional investors as securitized portfolios. It's done a couple of small deals locally, Sukuk transactions, I think a couple of $200 million deals. We write about it in our reports. And Fabrice is adamant, and I think it will happen, that there will be larger domestic, probably 500 million, and international, probably about the same, during the course of next year. And he thinks half one was his. We interviewed him for this.
Yes, indeed.
So he is very, very close to PIF, to the minister, very much of that inner circle of senior executives working on this project. My view is he wouldn't be staying around if he didn't think something was going to happen. And now is about the right time to do that. The challenge they have is that the banks particularly love, it's zero risk weighted stuff, and they're making money on it. So why do I want to give it to these guys? I mean, and it's a terrifically profitable, high growth area for the banks, which are very well capitalized because SAMA is let's call them a prudent regulator, but SAMA is
very cautious. Yes.
On that. So from a Euromoney point of view, of course, what we would like to see is a much larger securitized market, because that brings international capital into the picture. But I think it will come. I think the originate, distribute, securitize model is not yet well appreciated by the banks, but with a nudge from their regulator, it could well be. And the development of deep liquid capital markets is another key platform for Vision 2030. And having a mortgage-backed securities market of whatever description, both real and dollar denominated, or multi-currency, but almost certainly dollar, is a really interesting nascent securities market. And one would imagine that it will have yield pickup over the Saudi sovereign, not an enormous amount, because essentially you've got the implicit sovereign guarantee, so it will be sort of sovereign issue paper. But even so, you're going to get a 200, maybe 300 basis points pickup over comparable things, like in the US and all of that.
Which is very welcome.
An interesting niche piece of EM debt.
Yes.
And, that's one of the reasons we are so interested in it, because that's what we talk about.
And I see some of the questions coming in on the Q&A address some of these points. So there was one that asks what sort of capital markets issuance would be helpful to the further development of the market. Now, you've kind of answered that, but perhaps we might extend that question to think about likely investor bases. Who might these deals be sold to? You mentioned it could be dollar, it could be local currency. So just talk around that a little.
Well, in the kingdom itself, you've got a whole, you've got a large investor base with institutions like PIF, SAMA. SAMA is a central bank, but it also holds a lot of paper. It doesn't tend to hold Saudi paper, though. That would be, it's not doing that. But PIF does. Hafsana, which is the investment manager for the state, one of the state pension funds, the private sector state pension fund, and RSC, which is the same investment manager for the public pension fund. So that's for the civil servants and military. And then you've got a series of development funds, about maybe up to 94 billion, of which RADF is one, but they also have treasuries. And you've got a nascent insurance investor base. So, and that lot together, Hassana's assets are thought to be around 100 billion on their own. So, absorbing a chunk of the market domestically, I think will be very easy in both real and dollar denominated. And then internationally, I mean, look, it's going to be a specialized trade. It's an EM, it's something that would go into, EM debt portfolios and people who are specializing in housing and MBS. I don't know how, I mean, I'm not a great expert on global, global EM MBS. But I mean, there will be specialist funds who will be, that's their job to buy that sort of paper. And I think the Saudi paper will be a welcome addition. I mean, we've seen it with sovereign. The Saudi had almost no sovereign borrowing 4 years ago. And we just gave the Saudi, Global Capital, our sister publication, we gave the NDMC, the National Debt Management Committee, National Debt Management Center, which is the Saudi DMO, run by a top chap called Fahad Al Saif, ex-HSBC, very smart. We gave them our DMO of the year, 2020, Global Capital did. There just literally wasn't one before. I mean, it wasn't that they've upgraded it. It's gone from nothing to a very well-respected issuer. They've extended the yield curve out to 40 years. They've shown that they have the ability to do this. So I'm convinced that, what the sovereign is there, they need to do a bit, they're going to look at multiple currencies, all sorts of things. But they've got that benchmark that wasn't there 4 years ago. So what's the logical next step? Well, you're going to see other issuance. You're going to see corporate, you're going to see FIG, and you're going to see MBS. And ideally, there will be a gradual removal of the government guarantee as the market matures. And then you will see, segmented paper, all sorts of different things. But for the moment, it's basically there's no segmentation because it's all guaranteed by the government. So that's your credit risk. So
yes, of course. But any market has to start somewhere. And we've seen in other markets how that evolution takes place over time, haven't we? So interesting to watch. Now, a number of questions have come in from Suzanne Farouk Shafiq. The most highly upvoted one at this stage asks, are Saudi banks earning any profit from REDF? Now, you can take that in one of two ways, I guess. One is the broader question, which I think you've addressed, about the profitability of a burgeoning mortgage market, or you can perhaps answer it more specifically in relation to the program itself. Any comment for that question?
Yeah, the answer is yes. I think the whole point of this exercise is to develop a financial market, and the participants in that financial market have to make a profit on it. Otherwise, it's not a real financial market. So yes, the banks will charge fees. They will charge an interest rate or profit rate or whatever the structure is, because there are all of Saudi is run under an Islamic finance arc, but within that there are extremely strict products, and then there are those which are more less rigorous, and the customer can choose where they want to go, and by far most of them do choose quite strict Sharia things through the through people like Al Raji and Al Jazeera and those ones, those banks. So yeah, they are making money on it. I don't think they're making an excess amount of money on it. They are not gouging in terms of charging exorbitant interest rates, because the government has a strong incentive to make sure that the interest rates, which they are subsidizing, are reasonable. So as far as I know, and I'm happy to be, well, I would be unhappy to be corrected, but not because of the correction, but because of what it meant. They aren't making, there's not a lot of sort of consumer pushback to this. And the banks are, having a great time because they've got an entirely new product that they didn't have 4 years ago, that has, intrinsic growth for the next decade.
Yes.
the issue, and it's a good question, but the issue that I see is, is the weaning of the market off the support of the government.
Yes,
that's going to be the difficult. I mean, there's a lot of difficult things that will have been achieved by the time we get to that question, but it's got to become a question in the future. Is if where do you price this market and how do you segment it? And my personal view, although I don't think that we're not looking at this for at least another 5 years, but clearly it says like, okay, well, we start at the top and we reduce the relief gradually for the higher income earners, and we still keep a subsidy or preferential rates or something to maintain that affordability for lower income people. So it becomes much more targeted, and there will be a gradual drawdown. And to some extent, that's what happened. There was a subsidized mortgage regime here in the UK up until I think the late 80s, and it was tax relief on mortgage payments. And
yes.
So the more you earned, the less tax relief you got, the more mortgage you paid. So, and that was gradually phased out. So now there is, you don't get any tax relief on a mortgage payment.
Yes.
And
okay. Well, sorry to rush you. I'm just going to try and run through some more questions here. I might bracket a few together into what you might call the macro impact on Saudi. Gabrielle
Suzanne is asking lots of questions. Thank you, Suzanne. I've just looked at the question.
Yes, indeed. And so we have one question about the rates environment, how that affects Saudi and its housing market. If I look at Hansa Enzivat, asks whether house prices are capped because of less exposure to international markets and international dynamics. And Suzanne asks one question about how financing might change post-vaccination. So I'm sort of bringing these together as a sense of external impacts on Saudi Arabia and the housing markets, whether it's international exposure, international rates, the pandemic. So I will let you run with that, with whatever you find interesting in those themes.
The real is pegged to the dollar. That's short of some sort of unforeseen catastrophe, and we seem to have quite a few of those. But it's absolutely intrinsic to the economic model of the kingdom to maintain the dollar peg. SAMA has the firepower to do that. You could posit a long term, i.e. 10 years plus, where it migrates to a basket. Kuwait has done that, but it doesn't seem to make a great deal of difference. Or you could go full float, but it would be a hell of a leap. So I think that that will stay. And what that means is that rates in Saudi Arabia track rates in the US, and that's really the primary international mechanism that will impact the housing market in Saudi Arabia. Is that if you see extremely high US rates as a result of unexpected return of inflation, well, that would be a challenge for everybody, but Saudi would be impacted with that. So your outlook for Saudi rates is basically your outlook for the US. And sometimes that causes them problems, but on the net, you net everything out, then it's actually very helpful to them. The other transmission mechanism to Saudi Arabia, of course, remains the oil price. The Vision 2030 is all about making that oil price, the economy, far less sensitive to the oil price. But it is called Vision 2030. It's not Vision 2020. So,
yes.
You've got to get, and even under the Vision 2030 forecasts, oil, energy, whatever you want to call it, is going to have it will be a significant part of both the economy and the government budget. So there will be variance in the economy based on oil, but it will not be this. It won't be absolutely correlated, which is what it has been. So the economy in Saudi Arabia, something happens in the oil market like it did this year. Interestingly, you look at the structure of the Saudi economy. A lot of people work for the public sector. a lot of people are on the government payroll. So when COVID hit, you didn't see this huge spike in unemployment of Saudi Arabians. You saw a little bit, but and you didn't see a major whack to government spending. In fact, government spending was reduced rather than increased. The macro picture in Saudi Arabia is the reverse almost. Well, not quite the reverse, but so you didn't have to pay for. We furloughed here, an enormous number of people. So the government is paying people's wages. That it was already paying people's wages in Saudi Arabia. So, it didn't have to shift 40% of its workforce from effectively the private sector to the public sector. The problem came on the revenue side, which is, the oil revenues went from X to Y. And, then the government fiscal picture looked very nasty in the middle of the year. We thought there could be a deficit of up to 20%. In fact, it's been less bad than forecast. GDP growth has been better. I mean, it's still 5.5 or 6% down, but again, we thought it could be 10, 12. And the deficit is, it's big. It's not where they wanted it to be, but it's about 12%. We think that was the number that the budget, which was yesterday, said. So those are the mechanisms which could impact the housing market.
Yes.
The government is committed to keeping. I mean, it has said repeatedly. Even the Crown Prince, in his speech in October, said, housing. It was one of the. He made a speech to the Shura Council. That was one of the things he talked about. We are remaining committed to this market. So we don't see the withdrawal of government support or even the brake being put on, because it's a very effective use of government finance.
Yes.
They have a multiplied effect. So. What I'm, and there's some questions here about this, but I don't know the answer to this question. It doesn't seem to be doing to the housing market in terms of price, in terms of sales volume, that it should be. And there's a question from someone about sales volume.
There is Adil has asked about sales under the Sakani program. I would also point out Hesham has asked about how house prices might look on a 5 to 7 year view, assuming there is new supply. So, by all means.
I think the answer, and I don't. Again, I'm happy to debate this with someone else, but because I'm not very strong in my opinions on this. But I think what you're seeing here is a nascent market. So it's not behaving like a mature market. So the usual signals of volume and sales and price, it's not there yet. And if you look at the messages from those, they are confusing. Because okay, you sell your house, but you've got to buy another one, and there aren't any. So you don't sell your house. Ergo, your volume is low. If no one is selling, the price is going to be static. Because it's not a market. You have, all you've got is buyers, and everything that is there gets bought. There are no sellers, so they're building. You're making stuff. You borrow to build, and then the normal patterns of mobility aren't there either. So your mobility at the moment is coming from. I'm 21 or 22. I've got married. I've had my first child. I need a house, so I buy a house across the road from my parents, or down the street, or in my case, as far away as I can possibly get. Well, they're only a mile away from me, but that's the mobility. I'm not saying, oh, I'm going to move from Riyadh to Jeddah and I need a new house, or I'm going to go to Taif or Dammam. You aren't seeing that sort of movement. So none of those indicators are currently operational because there is not enough liquidity in the market in terms of stock. Now, in 5 years, they should be, because that stock should be there. And if it isn't there, then there's a major problem, because something has gone very wrong.
Mm.
But if you drive through North Riyadh, there's a lot of new houses there already.
Yes.
A lot. I mean, mile after mile after mile. And you can see the infrastructure being put in to build more. And I worry a little bit about that, but where's the water going to come from?
Right.
But that's a different question. And they'll sort that problem out. So house prices generally, I think, will rise but where to is really hard to know. It depends about, where does that equilibrium, we don't
Yes.
know where the equilibrium lies because we don't know enough about what the market's going to look like. Sorry,
No,
that's the short answer.
To a big complex question. And we're almost out of time. I would just like to get one more of Suzanne's questions in, just because of the great effort that's been made.
I'd like to answer Victoria Ben's question at the end, if I could.
Oh, yes, we'll get to that as well. But just quickly, Suzanne asks about foreign banks, Saudi banks, Arabian banks, Asian banks, Islamic banks. I think this is a broad question about finance, but perhaps we can apply it specifically to housing finance. Is there a role for all of these disparate sources of capital, of advice to play in this burgeoning new market?
Yeah, well, I mean, in Saudi Arabia, there are 29 banks. I mean, they used to be 30, but then, Al Awal and SAB, there will be 28 soon, which is the NCB Samba merger, which is going to create a 220 billion regional powerhouse. There are 18 foreign banks. A number of those are issuing mortgages, not that many, but they are there, and they intend to grow their book. There's obviously international banks like HSBC / SAB, which is, SAB is not HSBC, it is a different entity, but it's managed by HSBC. It's got a very HSBC flavor to it. So it's the sort of main foreign bank in the kingdom in terms of retail. There are lots of corporate wholesale and investment. Saudi Fransi is no longer part of Crédit Agricole, and so on. So I think there is more opportunity, but I think it'll be mainly the regional banks. If you're an Emirati bank or a Kuwaiti bank or a Bahraini bank, this is on your doorstep. You understand the market. It's going to grow. It's a natural place to go, and it's a lot. I'm about to say something very rude about other countries in the region, so I won't name them. But it's more of a screaming buy than most other countries in the region at the moment. Any regional bank in the Middle East worth its salt will obviously have a big position in its home market. It'll look at Saudi, it'll look at Egypt. Two slightly different versions of the same story, which is demographics. Egypt obviously much bigger, but the income is less. So you're not a regional bank without a major operation in Saudi Arabia, and you can't grow outside in your home market because the smaller markets, very wealthy but pretty saturated. Where is the opportunity? Saudi, Egypt, and that's and then there are others, but those are the major opportunities, and those are demographic driven. It's an easy story. Egypt will be 100 million plus by the end of this decade, if it isn't already. Saudi will be 50. So you've got intrinsic growth, and you've got opportunity, and you've got room to run. So so I think they will. I don't see the a bank coming from Singapore. I don't see DBS putting a retail operation in Saudi Arabia because of the issues that MAS would rate the risk of it. Similarly, I don't see Barclays opening a regional branch in Saudi Arabia for the same reason. Banking has changed. You might see specialist international private equity companies coming in. You might see some of the larger fund managers, they're already there, managing pools of mortgages, supporting one of the finance companies which also issue mortgages. You're more likely to see that sort of private capital come into the market than you are global private capital, than you are, JP Morgan to open up a Saudi, or Chase, their retail brand, to open up a Saudi mortgage banking platform.
Indeed. I'm sorry to interrupt you, but we are almost out of time, and I do want to put Victoria Ben's question to you. Will you be producing this report annually?
I hope so. It's a lot of it is down to REDF and how they want to take this. I think it's something, it's going to be one of those interesting things that came out of the pandemic, which generally sucks, but it's made us think about things differently from the perspective of what we do. We just did events before. This has forced us into thinking about where we can add value to our partners in Saudi Arabia, in the private sector, wherever. And the webcasts are an interesting addition. I mean, we've talked to more people. We've talked to more people from different countries. We've talked more consistently. Lower focus, but wider spread. I think the sort of digital media, the webcast is a wonderful complement to live events because it keeps that conversation going throughout the year. And I think that's what will happen is that you'll have a center point, which is live whenever we can get back to doing that. And that'll be great. And then this continuum that goes out through the course of the year is drip feeding content, just to tell people what's happening. And then the report is a part of that, where you take the assumptions and the numbers that we had. I mean, if you look very quickly, I will do a final share, my final share of the season, my final share of the year, my final share of everything is this page where we actually, this is our model that we built to forecast exactly how we see the market, or what we think probably the market will look like over the next 10 years in terms of values and contracts and all of that. And I would be fascinated to follow that story for the next decade and see where it goes. So this type of thinking, this type of analysis is really useful as a complement both to the digital and the live. So I hope it will stay. But we've got to work through that with the REGF and work out how that functions. And Victoria Ben is my boss, and so therefore it's really up to her, I must say that.
Well, Richard, thank you so much. That's been a fascinating discussion. The series and the report are, I think it's fair to say, an extremely important contribution to a fascinating market. So, so thank you so much for your time today.
Well, I had to be here. I'm pleased to be, and it is, it's my last thing. I mean, I'm going to be on holiday in 2.5 minutes. So it's very happy. Chris, seriously, look, we've never done this before. I have no idea how it's going. I can talk the hindsight off a donkey, and I apologize for that. Thank you for doing this, for being game to give something new a try, and thank you also for doing the Jaggermas. It's been a lot of fun. I hope we work together in 2021 as much as we've done, more than we've done this year.
Oh, I hope so too. I hope so too. It's been a lot of fun. And I'd like to conclude by thanking our audience for joining us today. Wonderful to see so many questions, and very sorry we couldn't quite get to all of them. Hopefully everybody who put a question got at least one answered. This is the last live stream of the series, as Richard says. We'll be back in 2021 with some exciting new content, so please stay in touch to learn more. And until then, have a good break, stay safe, and Happy New Year. Oh, Richard.
I think we'd like to thank the Real Estate Development Fund for their partnership, and Samba, and the Ministry of Housing, who, as I said at the beginning, they've been epic, fabulous people to work with. We're really looking forward to doing that next year. Sorry, I just wanted to say.
No, you're absolutely right. Great. Well, thank you once again. Happy New Year. Bye.